It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all higher right now. S&P up by almost 5, a gain of just about 0.1%. Dow Industrials up 22, higher also by almost 0.1%. NASDAQ up 9, gain there of just about 0.1%. 10-year yield 4.41% with a 2-year 4.82%. Gold now lower by 0.2%, $24.19 the ounce. And West Texas Intermediate crude down 0.7%. WTI 79.26 per barrel of WTI. Traders keeping a lid on stocks ahead of results tomorrow after the bell from NVIDIA. NVIDIA shares right now just about unchanged on the day. Palo Alto Networks shares down 2.3%. Palo Alto lower after giving a downbeat forecast for the current period. Palo Alto down 2.3%. Also out with earnings last night and lower today. Zoom Video Communications down now by 0.8%. Recapping, S&P up 5, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, she played an AI virtual assistant in the 2013 film Her, declined an offer from OpenAI CEO Sam Altman, that was back in September, about voicing an audio feature for the company's popular ChatGPT chatbot, only, Tim, to be shocked, angered, and in disbelief, her words, when last week OpenAI released new audio tools and staged demonstrations that included a voice called Sky that sounded a lot like her.
That her that Carol is referring to is actress Scarlett Johansson, who says she was, quote, forced to hire legal counsel to demand the removal of an AI voice from OpenAI's chatbot that sounded too much like her own voice. Tracking this for us is Bloomberg News AI reporter Rachel Metz. She's in our San Francisco bureau. Okay, Rachel, it's a specific story of what happened to Scarlett Johansson, and that's a story that you write about, but there's also the bigger, broader story that matters about what and who can be manipulated in the AI world. So before we get to that part, walk us through what happened to Scarlett Johansson and then OpenAI's reaction to it, and then we'll get to how this illustrates things moving forward.
Sure. So Scarlett Johansson sent a very angry, or she set out a very angry statement yesterday saying that she had been asked back in September if she would be interested in voicing a voice for an audio feature for ChatGPT. She was not interested in doing that, and she told the company she was not interested in doing that. The company also put out a voice feature that same month. And so these voices, Sky is one of 5 that they released in September, and it's been available, for instance, if you're using the ChatGPT app on an iPhone, you could use this voice. I think it kind of was a little bit under the radar to the average person until just this past week when OpenAI released its new flagship model, and much of its demo centered on voice interaction, and they used this same Sky voice. I think a lot of people, perhaps including Scarlett Johansson, hadn't really thought, wait a minute, that sounds a lot like Scarlett Johansson until just recently.
And then there was the tweet last week,
Yes.
which we're going to put up on the screen, from Sam Altman. Can I call it a tweet? The post on X?
You can call it a post.
Just one word, Rachel, and it's
Her.
There it is. I think that might have done something, no?
I think so. I mean, it's kind of hard to say that that didn't refer to the movie Her, to the voice from the movie Her, to the her in Her, right? Which we all know is Scarlett Johansson. I mean, different people can have different opinions about who this Sky voice sounds like. And to be clear, OpenAI did say this was a voice, and like our other voices, came from voice actors that we hired. It is not Scarlett Johansson's voice, but I think a lot of people do think that it sounds like her, and she clearly thinks it sounds quite a lot like her. And I think that that is really, really important, that Scarlett Johansson thinks it sounds like Scarlett Johansson.
And Rachel, they yanked it, right?
Yeah, so what they did the other day, it's weird to wake up to things like this, but this is how it goes.
So new reality.
World, yeah.
I know, I was like, wait, what's happening? But so
Is this a dream?
yeah, exactly. Just yesterday, the Sky voice was paused, they said. So basically, and right now, like if I open up the ChatGPT app on my iPhone, what'll happen is I'll see it if I want to choose a voice. But if you choose it, you won't actually get to use it. You'll be using another voice. I think right now it's another voice called Juniper.
Okay. So I said that we'll talk about the bigger picture here, and that's what I want to get to, because it sort of, to me, is emblematic of this world where computers and humans are becoming closer together. This idea of living in a world where maybe what we hear in an audiobook or what we see on a screen isn't necessarily the person who it's portraying it to be. So talk a little bit about that.
I mean, I think that we're seeing, and we have seen over the years, quite a number of companies roll out assistant-type devices. This would be the latest. And what is interesting, regardless of the voice, about what OpenAI is trying to do now is with their latest model, they're saying these voices are going to respond in essentially real time. So in order of milliseconds, just like you and I would talk to each other. And we saw this on display in the demo. And that really changes the dynamics, I think, between a person and the technology. If the technology is going back and forth with you and also is sort of adjusting in real time to the way that you're sounding, which OpenAI says that it can do.
But I mean, isn't there going to be, like Tim and I were talking before we get on air, I'm like, aren't there going to be images, things generated, if they're pulling in all this information that's out there, that there's going to be something that looks like Tim one day, or you, or me. It's just going to kind of happen? Is that going to be kind of just, it's just going to happen? Or sounds like us?
You mean like an avatar of you?
Yeah, or something, but maybe not intentional.
Only if you're on Bumble, I think, is what we learned last week at the Bloomberg Technology Summit.
That's true. But, you know, if it's pulling in existing data that's out there, visual or other, audio, like, isn't it going to eventually create things that look like all of us, sound like all of us?
I mean, these companies are making really intentional decisions to create voice models. For something that's going to specifically sound like a person, you would be recording like a real voice actor's voice. This is what OpenAI said that they did.
Yeah.
And this is pretty common. You would record somebody saying certain things, and then you would use that to build your voice model, and that's how you end up with like a bunch of different voices that people can choose. Okay. It is true that it is getting increasingly easy to build like a deep fake voice of you or of I mean, someone could use this audio and build something like that pretty easily. But I mean, I think a lot of this, sort of what we're sort of going around here, is this issue of consent. Should people be able to do that? I think a lot of us would argue not under most circumstances unless someone explicitly approves of it, right?
Yeah.
One of the reasons I thought of this is so interesting is because just a few months ago, back in September, we saw the union in Hollywood that represents actors come to an agreement that included limiting the use of AI in recreating performances. And I thought to myself, well, this is a situation where, you know, the likeness of Scarlett Johansson was asked for by one of the AI companies that's a leader when it comes to this technology. And it's sort of emblematic, I think, Rachel, of the idea that in the future, maybe we could see these representations of folks who are maybe on a screen or in some other media that are generated by machine. Like that world is not too far away.
I mean, I would argue we're already there. There are certainly representations of people's voices, people who are still alive, whose voices may not work very well, like Val Kilmer. There are representations of people who are no longer alive, either video or voice or some combination of the two. I mean, in several cases, these are controlled and licensed by like the estates of these people, but it's certainly something I think is just getting better and better, and we're going to be seeing more of in the years to come.
Yeah,
and
right.
That's probably why Scarlett wanted to say something about it. She knows this is not the end of this.
Right, like we've done commercials, whether it was with Marilyn Monroe or other celebrities, right? Like we've put there, but you do wonder like how much further this can get. Anyway, like you said, you wake up. This is especially for your world, you know, you're like, okay, this is what's going on. It's a little crazy, but it's interesting. And it gives us a chance to talk with you, which we so appreciate. Rachel, thanks so much. It is one of the stories that we're talking about a lot in the newsroom. It's like wild on social. We're just kind of watching different media outlets everybody's covering, including us, because just trying to make sense. Of course, Rachel Metz, Bloomberg News AI reporter there in San Francisco.
Hey, let's take a look at the markets right now as we are a little over an hour away from the end of trading here in the U.S. The S&P 500 higher by 0.1%. The Dow up by about 0.1%, and the NASDAQ higher just fractionally. Carol's still ahead.
Yeah.
We got one more thing. Most apartments on the rental market last year out of reach for many New Yorkers.
Maybe not a surprise, but wait till you hear some of the data. One more thing is coming up next.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Comcast News streaming bundle with Netflix, Apple TV Plus, and its own Peacock service will cost $15 a month when added to an existing TV or broadband internet subscription. Dave Watson, CEO of Comcast Cable, laid out the pricing of the new Stream Saver plan at a JP Morgan Chase Technology Media and Communications Conference today. At that price, the bundle, which will be introduced this month, will be more than 30% below versions of the three services sold separately. Disney's Pixar subsidiary, the pioneering animator that made Toy Story and Finding Nemo, is cutting 14% of its staff, all part of an ongoing belt-tightening by its parent. The company says about 175 employees will be getting layoff notices. A coalition of Tesla shareholders is urging its peers to reject the $56 billion pay package for CEO Elon Musk that the company's board has asked investors to approve again. Amalgamated Bank, SOC Investment Group, and 6 other signatories that hold a small portion of Tesla stock say Musk is distracted by his commitments to the 5 other companies he controls and is not serving the carmaker's best interests. Shell shareholders have approved the company's new energy transition plan with weaker carbon emissions targets, while rejecting a resolution asking the oil and gas giant to align itself with the goals of the Paris Climate Agreement. And Roche Holdings says an experimental breast cancer treatment will get an expedited review from regulators after showing it helped patients live longer without the disease progressing. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. Wait, Amy Morris in the Bloomberg at 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The United Nations says it suspended food distribution in the southern Gaza city of Rafah because of the lack of security and the lack of supplies. UN officials say no aid trucks have entered Rafah by using that floating pier that was set up by the U.S. The UN says its humanitarian operations in Gaza are near collapse. Two senior Biden administration officials say the U.S. has privately urged the Israeli government to reverse its decision to seize equipment from the Associated Press, blocking it from broadcasting live video of northern Gaza from inside Israel. Israeli officials accuse the news organization of violating a new media law by providing its images to Al Jazeera. Donald Trump's defense team has rested its case in its criminal hush money trial. Judge Juan Merchan sent the jury home today, telling them to return next Tuesday to hear closing arguments, which are set a week from today. The judge says he expects the jury will begin deliberations, hopefully at some point on Wednesday. North Carolina's House of Representatives is considering a new bill called the Unmasking Mobs and Criminals Bill. It bans the wearing of face masks in public that can hide a criminal's identity and would repeal the pandemic-era exemption, which allows people to wear masks for health reasons. That legislation was passed by the state's Senate last week. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Messer and Tim Stenevec.
All right, Amy, thank you so much. Well, I got to tell you, if you live in and around the New York metro area, one of the things that we love to do, and when a story pops up on the Bloomberg, it always is high atop our most read stories. It has to do with real estate, New York City rents, the cost of living.
People love to read those stories.
Love to read it, and we love to talk about it. Like, we were just off air, just kind of going at it.
Yeah, I mean, it's like, I don't know if it's universal, but it's certainly something here in New York is just the cost of housing is something that is an interesting topic to talk about.
Yeah.
But it's also something I think a lot of people would find really disturbing in terms of just the way the numbers work out here in New York City. So rents and high upfront costs, because it's not just the monthly rent, it's also, that security deposit, first month's rent, last month's rent. That actually means that fewer than 5% of New York City apartments were affordable for the average local worker last year. There are some definitions here.
Right.
Okay, so when it comes to affordable, Carol, we're talking about the average cost of average salary of a New Yorker, just under $89,000 in 2023. So that means if you take the 30% rule,
right,
30% of annual income, that means rent would be affordable up to about $2,200 a month.
All right, and so this is a new report by Zillow Groups, Street Easy, and Tech NYC, factoring in those average upfront costs, which includes, as you said, that first month's rent, security deposit, broker fees. That amounted to $10,454 last year. The average worker could only afford 4.4% of rentals on the market without breaching that affordability threshold.
One challenge here, and it's not unique to New York, is the idea that rising rents have outpaced rising salaries in recent years, especially during the pandemic.
Right. Median asking rents jumped 8.6% to almost $3,500 last year, while average wages in New York City climbed just 1.2%, according to this report. City's housing shortage also worsening with about a 380,000 deficit in homes, outpacing metro areas in San Francisco, Chicago, and Boston combined. So supply shortages pushes up the prices, but then you also have incomes not keeping up, and so it makes it really difficult to afford these apartments.
Even tech workers who earned an average of $135,000 last year could only afford 35% of the rentals on the market. That's why a lot of people have roommates.
Yeah, these are the
and
things.
A lot of roommates.
Yeah, exactly. In New York, bunk beds all over the place. All right, everybody who's watching on TV, the close is coming your way. Tim and I continuing on Bloomberg Business Week on radio, YouTube, Bloomberg Originals. John Mackey, the co-founder of Whole Foods, we're going to talk to him about a new book, and then we're going to get tales from the Witch of Wall Street. It's all to come in the next 2 hours right here on Bloomberg Radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Bloomberg Business Week continuing on radio, TV, YouTube on this Tuesday, May 21st. And we're just about 1 hour away from the closing bell. On this Tuesday, we're bouncing around. Little change. It's almost like we are waiting for something, Tim.
Waiting for NVIDIA earnings.
Oh, yeah, could be that.
Tomorrow.
Yeah.
Abigail Doolittle just walked in.
Yeah.
We're going to catch up with her in just a few minutes. I hope she has something to talk about because the markets aren't doing much.
It's kind of a little ho-hum, everybody. Anyway, so that's our setup. We're going to get to Abigail in just a moment. Hey, still ahead, though, over the next 120 minutes, we're going to be joined by the founder and former CEO of Whole Foods, John Mackey. Conscious capitalism. He's written many books, created Whole Foods, created a whole different conversation around supermarkets and where we shop for food, how we shop for food, how we think about food. So, got lots of questions.
He's only
for him.
recently retired, too, just 2 years after being CEO. So he saw it through the Amazon transaction.
Been CEO, though, for a long time.
Yes, been CEO
Kind of
for a
back-
very long time. Hey, one thing that you know I love to talk about is the demographic implications of, or the economic implications of changing demographics. I mean, look at China, look at Japan, look what's happening in those places. Now look what's happening in the U.S.
It was a big topic at Milken on my panel, that of all the things like people who came from real estate, private equity, private credit, venture, they wanted to talk about longevity and the implications it has for pension obligations, how we live, so many different ways. So we've got a great story on that.
Yeah, we're going to dive into that. Also, Alphabet's self-proclaimed moonshot factory is coming back down to earth. This is a most read story on the Bloomberg terminal, and it's today's big take. We saw a few of those Waymos out in San Francisco when we were there.
We did.
Our waiting lists for it.
Oh, that's
so, like, you can sign up on the app.
I've never gotten in. Next time we're out there, we have to get, pop into one.
We have to sign up ahead of time to, try to get one.
All right, we'll work on
maybe
that.
Ed Ludlow could hook us up.
It's something you're not going to want to miss. Tales from the Witch of Wall Street. This is someone who has seen a lot on Wall Street, got a new book out, so looking forward to that.
All that and more over the next 2 hours. First up, though, check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. We got stocks higher, just about 58 minutes to go ahead of the closing bell. Right to the numbers. Not a lot going on. We got the S&P up 5, up 0.1%. Dow Industrials up 24 now, also up by about 0.1%. NASDAQ, the composite index, up 14, up just about 0.1 there. NASDAQ 100 index also up 0.1%. 10-year yield 4.41% with a 2-year that's yielding 4.83%. Gold down 0.2%, 24.20 the ounce, and West Texas Intermediate crude down 0.7%, 79.26 a barrel. Well, the main focus for markets tomorrow's after the bell results from AI bellwether NVIDIA, which has powered a large chunk of the S&P 500's recent earnings. Sarah Hunt is chief market strategist at Alpine Saxon Woods. She says, no question, there is a lot at stake in tomorrow's NVIDIA report.
I think if NVIDIA continues the theme that the AI spending is strong and that there is very good demand and they still see that going forward, then I think that there will be enough of a relief that people can start looking at all those ancillary plays on AI, which people have been talking about, which broadens it out, right? Which gets into some of the industrials and some of the utilities because of the spend that's going to need to happen if we're going to have the capacity to utilize all these AI resources that we're trying to build.
Sarah Hunt of Alpine Saxon Woods. She was interviewed this morning on Bloomberg Daybreak. Shares of NVIDIA, right now, they are trading a little change. We've got NVIDIA down less than 0.1%. Recapping stocks higher, S&P up now by 5, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com.
All right, everybody, let's get a little bit more on the markets. Charlie breaking down where we are on the trade. Feels like we're in a very tight range in today's session, awaiting NVIDIA's earnings and going through as we kicked off the last hour with Michael McKee, all of those Fed speakers who are out there talking about what they expect 11 days ahead of the blackout period.
The countdown has begun.
This
is what is happening, Abigail, is Carol is like looking for things to talk about, and she did a countdown to the blackout period.
Not the Fed meeting. Put
Not
to the
a countdown to the
blackout.
Fed meeting.
Well, you were just mentioning it sort of feels like August, so it's good to come up with topics. So, and to your point, Carol, yes, we're in a really tight range. We have the NASDAQ 100 up, not even 1/10%. Same deal for the S&P 500. So I'm scouring for areas where there's a little bit more action. It happens to be to the downside. The NASDAQ Golden Dragon Index, HXC, down 2.2%. I'm not sure what's going on there. Alibaba, it actually gapped down today, so which is pretty bearish. It is potentially going back down into a range, and that index, of course, I think has been down 3 or 4 years in a row. Another index, this is very interesting.
It was down
actually.
1.6% yesterday too.
Yes, and
So it
one thing we should mention is from the end of April to the end of last week, it had climbed 22%.
Okay,
so maybe
yeah,
a little bit
it's
of
been-
consolidation
yeah.
around that. But this is really interesting to me, at least. So I'm glad that there's nothing going on because we're forced to work
You
a
can
little
go
bit.
wherever you want.
Okay, so I'm going to go to the Dow Transports, down 1.6%, back below the 200-day moving average. You have most of the members in this index down right now, and I'm not sure, what's driving them down, but you have the railroads down, you have J.B. Hunt down, you have Avis
Wow.
down. There's only 2 members higher. And what's interesting, so I don't know that Dow theory, and I'm not a Dow theorist by any means, but the fact that you have the Dow Transports going below the 200-day moving average, you have these other indexes at record highs, that is a big divergence. Now, there are people who are going to argue it doesn't matter because the new Dow Transports is the SOX. Well, that is also down, only down 0.4%. But when you think about the fact that you have this big spread between these companies that are the backbone of everything that happens in this country and beyond.
Still got to move stuff around.
Yeah, it really stands out. It's a big divergence. And also, I'll go back to if the SOX is the new Dow, as we were talking about yesterday, the last high for the SOX was in the beginning of March. So you have a divergence there too. So I would say these markets are messy. Trading is less on information, less uncertainty, and more maybe about fear of missing out and those sorts of.
I know you're not a Dow theorist. You said that, but I'm really interested in what you said about the transports.
It's interesting. It stands out. I'm
Union
glad.
Pacific down 3.7%. I'm just looking at it now.
Yeah.
This wasn't on my radar. Avis Budget down 3%.
Yeah,
JB Hunt
big
down
moves.
2.8%. United down 2.5%. Is there a way we can extrapolate a story about the way that investors feel about the economy, or is this just one day?
Well, the fact that it's below the 200-day moving average is the reason it's not one day. I mean, within the range it is actually, to be fair, because the range is so tight on this index between 15,000 and 16,000. It's basically been trading in between. But today is a big leg lower. I mean, I'm guessing that this is the worst day in quite some time. I'm just using the SINS function on the Bloomberg. Well, actually, not really, since April 30th. But the weakness here stands out. So is it a play? Is it a call on the economy that there's something worse happening with the U.S. economy, that there's going to be less? I mean, there's been a bear market in freight trucks for a year or two. So that's not necessarily.
the
I
freight
still feel like there's
recession.
still a little bit of a correction too coming off of the pandemic and kind of resetting.
Yeah. So, but like when you have that kind of a divergence, there's so many divergences right now. You have the S&P 500 and the NASDAQ at all-time highs. You have the China tech stocks in bear market.
So what does that mean when there's so much divergence in different things?
It means that typically there's going to be a meeting in the middle, and we don't know which way. Or you could say, if you were going to be really aggressive, you were going to, and I think I should know. I'm remiss. I really don't know. Years ago, I actually overspoke on Dow theory at one point, and I don't know it closely enough. But what I believe is, so if you see a new low in the Dow Transports, we're nowhere close to that at all, and you see a high in the Dow, the Dow Jones Industrial Average. I think that's a bearish signal. But the divergence here is you have the S&P 500 and these broad indexes, the tech indexes, running up to all-time highs. And again, this backbone index is below its 200-day moving average. The long-term buyers are basically saying they don't want these stocks. It tells you there is some kind of a split, because even though it's technology and chips, all the boxes that come to my building, they're being delivered off of trucks, off of railroads, off of ships.
Right.
So there's something to be made of this. And also that SOX not having an all-time high since March, while these other indexes, that stands out to me too. That chart's just messy. It speaks to a lack of knowledge.
The stuff gets delivered to my my place, and then I watch on the Ring camera people steal it off the porch. So,
No.
yeah, that's all.
Are you
fun.
serious?
Yeah.
Porch pirates. Haven't
The
you heard of
porch
porch pirates?
Yeah.
No,
Yeah,
wow.
it's happened once, but it's stung. It's stung.
Yeah,
our
especially
neighborhood.
depending on what's in the box. Although I guess they have to
Yeah,
resend
they
it
have
to
to
you.
find out. They were very disappointed with the the bubble bath for my son.
The diapers?
Yeah, they weren't. You're not going to resell that for a lot. Hey, Abigail. Okay, we talked about Dow Transports.
Well,
Sure. What did you want to say?
Well, NVIDIA. What do
Yeah.
we need to know about
I'm guessing that's where Tim was going to go to.
Yeah, the melding of the minds. That's
Yeah,
right.
it's hard. I mean, it's hard to not go there. I mean, that is really, I think, in part why we are treading water right now. It's the information everybody's looking for. So it was interesting earlier today, right after the open, we saw NVIDIA plunge briefly. I mean, plunge is a little harsh. Down more than 1%, given the fact that this stock is expected to move 11% one way or the other off of earnings.
Yeah.
What's 1% this way or that way? It's actually now just flipped slightly into the green, and it was about an FT report that Amazon's AWS is halting the Grace Hopper chip order to await a new chip. It seems as though calmer minds have now.
He was dismissive of it, right?
He was, yeah.
Ian King.
That markets are too. It was headline fear, headline risk, and now investors are back on track. But the big question is, and it was gratifying to me to hear a strategist this morning on the open, I don't remember his name, but saying at some point this company's not going to beat and raise. It's if you think back to 2000 and other time periods, you have these companies that put up monster results. At some point, it's not going to. Will that be tomorrow? I have no idea.
Right.
And in terms of the chart. I've made some calls on the chart before that haven't worked out, so I'll stay away. And it's also in this range. It's hard to say.
Yeah.
It's either this is not helpful to anybody. It is actually going to have a massive move up or down. The RSI might suggest down, but I'm on the cusp.
Mom or dad are going to say yes, or they're going to say no.
Say no. Which way is it going to be?
We'll find out tomorrow. Big thank you to Abigail Doolittle, Bloomberg News Chief Markets Correspondent here in our Bloomberg Interactive Brokers studio. X within what was then Google was founded back in 2010. It's the idea that it would capture the public's imagination with visions of a techno-utopian world it would help invent. Think of Waymo, think of Google Glass, or Project Loon, which were these high-altitude balloons that would beam internet to remote locales.
Love it, right? Like it
What's
just.
not to love?
Yeah. Well,
Except for Google Glass.
Exactly. Well, Alphabet's self-proclaimed moonshot factory is coming back down to earth. So writes Bloomberg News technology reporter Julia Love. She joins us now from San Francisco. Her story, by the way, one of the most read on the Bloomberg terminal today. It is also the Bloomberg Big Take on this Tuesday and available in the upcoming issue of Bloomberg Business Week. So be on the watch for that. Julia, all right, break it down. What is going on?
Well, thank you so much for having me today. It's a really interesting crossroads for Doodle X. They were founded with big hopes. It was the place where Doodle was going to take these big swings and funnel its profits from the search business into finding the next big hit in a totally unrelated industry. They made self-driving cars. They launched internet-connected balloons. But now it's been 14 years, and the money is starting to run dry. The lab's budget has been cut, and they're shifting to a model in which they're going to be spinning out these moonshots as independent startups, which is a big change.
Are these independent startups, what is their connection to Google at this point? Because the whole idea with this was that this was a lab within Google, and it would create something. And I think a good example of this, I don't know, was over at Amazon, AWS, for example. Like that became an incredible business at Amazon, and it was started as like a side project at Amazon. But if we think about it from Google's perspective, this was supposed to be the thing that, Sergey Brin was imagining in his like techno-utopia of the future. What is the connection that the company will have to these startups?
Yeah, absolutely. So I think they will remain within the Alphabet family in a certain sense. In many cases, X will take a stake in these startups, so it will still profit if they succeed. But they will no longer be Alphabet-owned companies. And I think that the benefit of that for Alphabet is that building these businesses in far-out industries takes a lot of patience. They've been at it with Waymo for well over a decade, and that bet's business model has really yet to pan out. So I think that they were kind of reaching a crossroads in which they were ready to hedge their risk a little bit and find opportunities to cash in on their investment.
Well, and how much of this is also kind of sharpening their financial pencils and making, kind of reining in some of the costs because of increasingly how much we've been talking about AI and the importance for this company to be positioned clearly and strongly when it comes to Gen AI and all that's maybe to come.
Yes, I think that is a huge part of the story. We have seen belt tightening across Doodle, and X has been no exception. I think there's a feeling that the company really needs to drill down on its strengths, and X projects increasingly are focused on either AI or climate change, and the lab really has been feeling budget cuts. It used to have a project to celebrate, or it used to have a party to celebrate the projects that had been eliminated, and even that party has been cut, sadly.
Julia, what's lost here for Alphabet, for Google?
In the past, X, in addition to the projects that it sparked, I think it was a powerful tool for retention. It was a place that many Doodlers aspired to work, and it really signaled that this was a company that was about much more than search. And now I think it does sort of raise questions about how Doodle will continue to express those ideals and what the company is really about.
I wonder too, this is, I feel like tech entrepreneurs are always like this idea, like free to dream, and kind of go different places, that luxury of having maybe a really strong core business that generates cash that you can play around. And I think in your story you point out from Google's early days, you talk about the two founders made a point of funneling profits from their search engine into businesses that had nothing to do with it. Out of this effort came Gmail and Google News. There are things that are so part of our lives, and I'm assuming help move the needle, that you do wonder when you're not able to just free to dream, what gets lost, kind of building on what Tim asked.
Yeah, absolutely. I think it's a moment across the valley when we're seeing the tech giants really kind of buckle down. Amazon and Meta have also cut back on some of their moonshot-style projects. But I think that we are seeing a lot more appetite to invest in deep technology in the venture capital community. And some people who I've talked to think that that is part of X's legacy, that it showed the value in taking these big bets.
Did anything ever come of, we know Waymo, where Waymo is. Carol and I were just in San Francisco and we saw the Waymos everywhere. Google Glass, we have Apple's version of a face computer and we have Meta's version of a face computer. Yeah. So we're not wearing Google Glass, but certainly that idea is sticking. Project Loon, though, is that something that at all ended up sticking?
Well, interestingly, Project Loon was killed, and that, I think, was a big turning point for X. It really signaled that that the business model was paramount. But there's another project, Tara, that is still alive within the lab. It took some of Loon's technology, and there's no balloons, but they transmit internet through beams of light. And interestingly, that project is now viewed as one of the best candidates for this new spin-out process.
So stay tuned. So still stuff will come, but just it's a little bit of a different focus. Really interesting read, and as we said, it's a Bloomberg Big Take and coming in the upcoming new issue of Bloomberg Business Week. Our thanks to Bloomberg News technology reporter Julia Love joining us from San Francisco.
Taking a look at the markets, the S&P 500 is actually up 0.2%. The NASDAQ Composite up about the same. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. 39 minutes to go ahead of the closing bell. S&P best level of the day right now, up by 9 points, gain there of 0.2%. Dow Industrials up 52, a gain of 0.1%. Nasdaq Composite Index up 20, higher by 0.1%. 10-year 4.41%, with a 2-year that's yielding 4.82%. Spot gold little changed on the day, down 50 cents the ounce to 24.24. Well, the countdown is underway to NVIDIA. Nancy Tengler is Chief Investment Officer at Laffer Tengler Investments.
The driver of this market is, in fact, NVIDIA and then AI. And so it's going to matter a lot. But if it sells off, that has historically been an opportunity to step in. That may give us a chance to get in. We've not owned this stock. It's a little lofty on our valuation metrics. But on traditional metrics, it's really not that expensive if the growth sustains.
Nancy Tengler of Laffer Tengler. We've got shares of NVIDIA up by 0.3%. After earnings, Macy's now up by 3.2%. After earnings, Lowe's down 2.6%. Rival Home Depot also lower. Right now, Home Depot down by 1%. Recapping, stocks are advancing. S&P up 8, gain of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, demographics, incredibly important to economies. Look no further than the challenges facing China and Japan, among other countries. Well, it turns out an increasing number of money managers are coming around to the view that falling birth rates and aging populations have serious financial implications. Companies, for example, will have to fight for workers, which could cause wages to just continue to go up. And these managers are making changes to clients' portfolios based on that view. We got with us Sujata Rao, markets editor for Bloomberg News. She writes about the investment implications of a world that's fast getting older. Sujata joins us from London. Thanks for staying up late for us, Sujata. Certainly appreciate it. Talk to us a little bit about what these investment managers are doing in terms of the investments that typically look like quote-unquote safe investments and how they're no longer going into them.
Yeah, what has changed is a sort of there's been a change in thinking in recent years. Basically, demographics, aging populations, low birth rates were seen as deflationary, something that would lead to like Japan was the blueprint for that. But there's been a bit of a shift in that thinking, because now people wonder, as you pointed out, if low birth rates and fewer workers is going to mean higher inflation, and that would mean more government spending, because governments will have to pay for the elderly population. Tax takes are going to fall, so that means huge amounts of government spending. And what that means is that is bad news for bonds, because you're going to get big deficits. Governments are going to have to borrow more, and that means bond yields are going to be higher. Interest rates could be higher, and so what money managers are doing is taking some of their money out of bonds, safe haven bonds, such as, for example, U.S. government treasuries, and putting it into other assets. One is gold, that some people are doing, commodities, and a lot of people are putting their money into equities, more money into equities, and that's because they expect bonds to not do so well. One, they don't expect bonds to do too well at a time like that. And second,
go ahead. Yeah. Forgive me. No, Sujata, continue.
And the other one is that the retirees are going to need more money because the bonds are just not going to be probably enough for retirees to retire on. The income from bonds. So equities is what might.
Sujata, you know that certainly in the United States, we've been here before where we were concerned about, ballooning federal deficits, right? And then when it's kind of gone away and we weren't so worried, especially in the era of, money didn't cost us anything, and servicing that U.S. debt didn't matter. But it also seems like we spent a lot of post-pandemic. We continue to spend on big programs, infrastructure, semiconductor build out, and more out of the U.S. government. What's different this time around?
I think what's different is, one thing that's different is that interest rates are going up, and if we have a higher inflation future, that means interest rates are going to stay high. That means the cost of servicing that debt is going to be much higher, especially if we're going to have to keep borrowing in future to fund the aging population. So that means a lot of people have been warning about this. So you've had people like Stanley Druckenmiller, the investor. You've had people like Larry Fink from BlackRock. A lot of people have been warning about the risks of this.
You know, it's interesting, and Tim has heard me say this a million times, but coming back from Milken it was about a week or so ago, 2 weeks ago, and a panel that I moderated, which had somebody from the real estate community, private equity, private credit, venture capital, different asset classes, if you will. Also somebody who was in options trading, market maker, if you will, Citadel Securities. And so they all kind of came at it from different liquidity levels, if you will, on the investment scale. Having said that, in our planning call, and we ended up talking about this in a panel, was longevity and the implications it's going to have on pension obligations, as you said, in terms of rates, how we live, costs of living, you know, just so many different things that we kind of have been so dismissive about it because these things happen, demographics often slowly, but it seems like all of a sudden there's a lot of momentum, if you will, to that demographic aging, if you will, longevity train.
Yes, and one of the reasons is that we've had a steady drumbeat of data showing that birth rates are falling at a really alarming rate, not just in the developed world. Obviously, this is happening. This has been happening for a long time in Japan, places like Germany, and obviously it's happening to a lesser extent in the US and in the UK. But this is also happening in the developing world. So we've seen China, for example, where the population growth where population is supposed to start shrinking. Birth rates are falling very fast. But it's also happening in countries like Brazil, for example. In India, populations falling below replacement levels. So the implications for this are really, really huge because one, a lot of these countries fund much of the developing world, places like China or India or Brazil or South Korea. They're currently buying U.S. treasuries or German bonds. That's allowing countries in the West to keep spending. But in future, these countries are going to have to support their own aging populations. They're not going to be able to buy treasuries.
Sorry, Sujata, I just want to jump in because one thing that we've talked about a little bit when we talk about changing demographics and the replacement rate in terms of births, at least here in the U.S., is one thing that's offset that. The challenge here is immigration. It's a country that people look at one of the biggest political issues out there right now, the border. People want to come to the United States. And those people who come to the United States, many of them want to work, which leads to people taking on some of the jobs, many of the jobs that Americans or folks born in the U.S. would not do. So what about immigration with this? Because if the U.S. continues to attract immigrants and those immigrants do get jobs, then doesn't that solve some of the issue that these investment managers are concerned about?
That's a really good point, and you're absolutely right. It does, to a very large extent. It does. So there's some big uncertainty about how everything will pan out in the end. It may not all be gloom and doom because obviously, as you pointed out, there is immigration. Countries with a lot of people with growing populations can supply to some extent labor to countries with shrinking populations. So that could offset some of the problems. And there's also AI, or there's also tech, which could actually take some of the jobs that people are currently performing. These things are out there to be debated. One thing is for sure that countries with more dynamic, that encourage immigration, do seem to have more dynamic economies, and the United States is one. So that's what a lot of fund managers are doing. They're tracking immigration flows. They're investing in countries that have easier that have a supply of labor through immigration. And for example, some of them are buying bonds from countries like Korea, which don't allow immigration. And let's put it this way: they're not friendly towards immigration, and they have a shrinking population.
But it is interesting, this concept that if, the shift, especially for pension obligations, if you see the shift from fixed income
to gold?
or treasury, to gold or to equities, like the implications of that in terms of the investment market, what it means for fixed income or Treasury specifically versus the equity side of things. I mean, that would be a shift in the investment environment in a big way.
It's massive. Because,
right?
Yeah. Yes.
Yeah, it's just something to think about. And, you know, I feel like the drumbeat is getting louder and louder, and there are a lot of investment professionals pretty worried about this. Glad we could spend some time on it. Sujata Rao, she's markets editor at Bloomberg News. Thank you for staying up later. We know it is later there in London, joining us from the UK. And this story, as we said, check it out. Looks like there was a Bloomberg Big Take podcast on it as well. So certainly something that you can download and check it out wherever you get your podcasts. So interesting stuff.
Hey, we're under a half hour until the close of U.S. equity trading here, and the S&P 500 continues to march ever so slightly higher around its best levels of the day, up more than 0.2%. The Dow Jones Industrial Average higher by just about 0.2%, while the NASDAQ Composite up just about the same. Sort of a little bit of a step back and a chill and wait before NVIDIA earnings tomorrow.
There's one stat, I think she said it, but I just want to go back there. The UN predicts that 1 in 6 people will be age 65 or more by 2050. So that's globally.
Aging population.
Yeah. It's not just we used to point fingers. It's happening over there and there, but it's also happening here in the United States. All right, everybody, you're listening and watching Bloomberg Business Week. Let's get an update on world and national news. Amy Morris is on it. We head to D.C. Hey, Amy.
Hey, Carol. The defense in the Donald Trump criminal hush money case is rested. Trump did not testify, even though he said he would. Bloomberg's June Grosso says it's kind of hard to tell now which way the jury might be leaning.
So much depends on whether they feel like they need to believe Michael Cohen or not. I mean, the defense tore him apart in so many ways. You know, as far as, we already knew when we started out that he was going to be a bad witness. I don't know if the prosecution knew how bad a witness he was going to be. So, we had the fact that he lied under oath several times, which is tough to regain your credibility after that.
Bloomberg's June Grosso. Judge Juan Merchan told jurors they won't be needed in court for another week. He says the attorneys for both sides will give their closing arguments on Tuesday. The jury could get the case as soon as Wednesday. Secretary of State Antony Blinken calls the decision by the International Criminal Court's chief prosecutor to seek arrest warrants for Israeli leaders on charges of war crimes in Gaza wrong-headed.
The extremely wrong-headed decision by the ICC prosecutor yesterday, the shameful equivalence implied between Hamas and the leadership of Israel, I think that only complicates the prospects for getting such an agreement.
Antony Blinken speaking during a Senate Foreign Relations hearing, and he added the administration was looking at appropriate steps to take on the prosecutor's decision, but he didn't elaborate. A British man was killed. 7 other people were critically injured after a Singapore Airlines jet flying from London to its home country encountered severe turbulence when it entered Thai airspace. Officials say 16 other passengers were hospitalized with head and arm injuries, and the passenger who died was 73 years old. He may have suffered a heart attack. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at stocks at the best level of the day. 20 minutes to go ahead of the closing bell, so let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid right now, with the Dow currently up 77 points. S&Ps are higher by 13, while NASDAQ gains 0.2%. The U.S. 10-year yield at 4.41%. Gold is lower by 2, oil trading in the red, and Bitcoin, that's lower by 0.3%. Among the main 11 S&P sectors, leaders were utilities and financials. Industrials and energy led to the downside, and leaders to the upside in the Dow, IBM and JP Morgan, while 3M fell 2% and led to the downside. In the semi-equipment space, Lam Research announced a $10 billion buyback and a 10-for-1 stock split. In other news, Walgreens fell 7% to its lowest level since 1998, and Eli Lilly traded to an all-time high. Wrapping things up, Toll Brothers and Urban Outfitters report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just coming up on 18 minutes to go until we wrap up the trading day. It's an interesting one. We're just off our highs of the session, but little change. We do get those NVIDIA results after the close, just 24 hours roughly from now. What?
Is it an interesting one?
Is it? No.
No. I got to keep you honest,
I just
Carol.
snorted live
I got to
on
keep
air.
you honest. Abigail Doolittle walked in here, and she was just like,
But you did great stuff. It's just kind of one of those, like, waiting for Godot kind of feeling, like market days.
Godot's NVIDIA.
Yeah, exactly. Waiting for Godot/NVIDIA. Let's see what Gina Bolvin has to say as we drive to the close, because we do have to wrap up the trading day. Gina Bolvin is president of Bolvin Wealth Management, and she joins us on this Tuesday. Gina, it does feel like a little bit of a wait-and-see mode, but listen, we just got through most of earnings. There's a lot of Fed speakers. We're waiting for the next Fed meeting. We've got NVIDIA tomorrow. I don't know. What's the important kind of market conversation for you right now?
Hi, Carol. Thank you for having me, and thanks for having me back. You know, we're expecting a good year in the market. I'm still bullish, but I just want to make it clear. I didn't just join the party. I've been a bull since I came on a year and a half ago in January. And one of the reasons why I'm bullish is because the consumer has stayed strong. What I like really about the market this year versus last year is we're seeing an incredible broadening out. I think what's so interesting is we have communication services up 20, yet we have utilities up 15%. Technology is up 15%. Energy is up 13%. Financials up 12. Industrials up 12. These are all year-to-date numbers, all double digits returns when you look at growth stocks and you look at value stocks. And that tells me it's a very healthy market.
Well, wait a minute. So on that, because Abigail Doolittle was here earlier and talking about the divergences that we are seeing kind of in different parts of the market. So, right, you've got S&P, NASDAQ, 100, right? You know, we keep talking about the various records that we've seen or trading near records. Transports are down. The SOX is way down. Last time we saw, a high level or its record high was back in early March. So there's divergences within the market that makes you wonder, okay, it's not like everybody's in the pool, the equity pool.
Well, I think that's true, but I think it's a very different market than it was last year, where you had the Magnificent Seven really leading until the end of the year. I mean, in the same year, when you have utilities, comm services, and technology up double digits, I think that's really interesting.
I want to talk a little bit about the Godot that we're waiting for, NVIDIA, because I know that this is something that you're watching closely, Gina. As Abigail Doolittle told us a little earlier in our program, the options market is pricing in double-digit moves to the upside or downside based on tomorrow's report. And I'm just wondering how you're looking at it.
So I can't speak for individual stocks, but absolutely, NVIDIA has replaced Jerome Powell as the market mover, right? And so much is riding on this earnings report because AI is really driving a lot of these gains in the broad market, utilities and in industrials. Beneficiaries are derivatives of the AI revolution that's going on. So it's definitely important. The whisper number of the earnings I see that's improving, and as long as it's a healthy beat, I think that's going to be good for the overall market. But keep in mind, are you an investor or are you a trader, right? Investors buy good quality stocks and invest in certain themes for really the long term. And AI really has a long runway, and a lot of stocks, a lot of sectors, even the economy in terms of productivity, all of these are going to matter over a 10-year time period and not just what's going to happen tomorrow.
Well, do you think the records that we've seen on the S&P and the NASDAQ 100 are indicative of a trader's market or investor's market?
That's a great question, Carol. And I think long-term investors can make money. And the reason is because we've just come through yet another better than expected earnings season. And it's usually fundamentals, and it is fundamentals that is driving this market higher, as well as we're in a better macro environment. Powell came out and he said very clearly, we don't see stagflation, and all things equal, we're not going to see any interest rate hikes. We are going to get cuts. I do think we'll get 1 or 2 this year. It doesn't really matter if it's in, May, July. It's not May, but it's going to happen in July. Is it going to happen in November or September? It doesn't matter. Interest rates are coming down, and that's what's going to help drive stocks forward as well.
How are you so sure of that, though?
Well, because inflation is coming down. It's still sticky, and interest rates are absolutely going to stay. Interest rates are absolutely going to stay higher for longer. One of the reasons why I think that that inflation is coming down is because the biggest component of CPI is housing. And housing is taking longer to show up. The decrease is taking longer to show up in CPI with the government data, but we're seeing it in private data that rents are coming down, and there's more building and there's more supply coming on the market. So this is just taking longer than we thought, but I do think that inflation's coming down. Also, we're starting to see the consumer be a little bit more stringent with their spending. The consumer's slowing. And, it's like, what took so long? Slower demand is going to help bring prices down. What has really driven prices up is, because companies could increase prices. Restaurants could stay at high prices. And because consumers are continuing to spend. If demand slows, then we're going to see some of these prices coming down.
Yeah.
And we're starting to see that.
Okay. Hey, listen, you gave us a lot to think about. So appreciate it. Gina, thank you for stopping by. Gina Bolvin, she's president of Bolvin Wealth Management Group, joining us there on this Tuesday. And I think it's, some things to think about. That idea of NVIDIA replacing Jerome Powell, I knew that kind of triggered.
Oh, I love that. That's like a great turn of phrase. Hey, I love that, Gina.
It is 11 days until the Fed blackout.
Count it. Yeah, tomorrow will be 10 days until the Fed blackout.
I'm going to count them down every day.
And then June 12th is when we get the next Fed decision and the dots, Carol.
Just saying, this is how we roll here at Bloomberg Business Week. All right, folks, just got about 10 minutes left in today's trading session. Off our highs of the session, little movement. We heard that before from Abigail Doolittle. Stick around there. We're going to head over to our TV colleagues in just a moment. We're going to count you down to the close on this Tuesday.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. S&P on track for another record. We've got Apple shares gaining today, extending a recent advance that has nearly erased the iPhone maker's year-to-date decline. Apple shares are moving higher right now. We got Apple advancing by about 0.7%. Well, the next big earnings event for markets comes tomorrow after the closing bell when we hear from NVIDIA. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence. He says, no questions, expectations are extremely high for NVIDIA.
I look at where the incremental positive news is going to come from for NVIDIA estimates to go up. And that's where I feel, OpenAI didn't launch GPT-5. That's a negative, because when you think about it, if the LLM companies are consolidating, it's going to make it hard for NVIDIA to find that next incremental buyer. Maybe it's Tesla. Tesla talked about a 10 go in with Oracle. But I feel the rate of positive improvement is going to slow down, because if they're losing China revenue, if all the hyperscalers have already announced their plan, it's baked in the price.
And right now, NVIDIA shares up 0.4%. Bloomberg's Mandeep Singh, by the way, analysts are looking for first quarter adjusted EPS of $5.64 on revenue of $24.69 billion. But of course, so much will depend on NVIDIA's outlook. Amazon Web Services has halted orders of NVIDIA's advanced Grace Hopper chip to await a more powerful new model. This according to the FT, citing confirmation from an AWS spokesperson. Shares of Amazon right now are trading lower, down by about 0.3%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. A couple stories on our radar, but one in particular that I want to talk about. We talked a little bit yesterday, Carol, off air, about the Red Lobster and the Red Lobster bankruptcy. Yeah, not the Red Lobster, but Red Lobster.
Right.
And the ownership of it is really interesting, and it's come under the spotlight because back in 2020, a company that is actually an international seafood company called Thai Union bought the company, and now it's put the spotlight on a family worth $1.2 billion.
Yeah, it's kind of interesting. As we said on Sunday, the business that's long been an affordable yet aspirational culinary mainstay in cities and towns across the U.S. slipping into bankruptcy. Slowing sales, growing reluctance by its controlling shareholder to pour in more cash. But as you said, has cast an unwelcome light on that shareholder of the Thai Union Group. It has been led by Thiraphong, I think is how you say it.
Yeah, Chansiri.
Has led it since 1995. He succeeded his father, who co-founded the company. It's also putting a focus on that fortune, which is said to be worth more than $1.2 billion, according to our own Bloomberg Billionaires Index. You know, when a story like this happens, we start to look at, okay, who owns it? What does it mean? And you kind of look at the investors or the investor family, if you will, behind it.
Yeah, this individual, Thiraphong Chansiri, is 58 years old. He's a University of San Francisco MBA. He has not commented on the Chapter 11 filing. But going back a little over a year ago to March of 2023, he publicly pondered getting rid of Red Lobster, and Thai Union earlier this year said it would write off its investment in the chain, resulting in a record quarterly loss.
Yeah, it's interesting. I feel like, you know, we've been talking about this company for a while, some of its woes, to see the bankruptcy, and you do wonder, you know, ultimately, is it the environment? Is it the investors behind it? Not necessarily, I don't know, changing with the changing times in terms of how we feel.
How does it go to zero in such a short time?
I don't know, because it really was, I think, affordable for a fair amount of people, but you do wonder, I feel like the food landscape, man, it got hammered in the
A lot of
pandemic.
questions about the $20 all-you-can-eat shrimp offering.
Yeah, there's a lot, right, blaming that.
Yeah.
Because when, you know, I have brothers who would go to those buffets.
Yeah.
Not necessarily there, but other buffets, and it's like, they eat a lot.
They're the loss leaders, right?
They are. All right, folks, we're going to head over to our TV colleagues. We're going to count you down to the close on this Tuesday. Beyond the Bell. It starts right now.
the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. Here to help take us beyond the bell, it's a global simulcast. Scarlett Fu here in the TV studio, Carol Massar and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms, as well as our partnership with YouTube to parse the most crucial moments of the day here, Carol Massar. And S&P 500 at a record high here on this day, although a modest record high.
Why are you shaking your head, Carol?
Well, record high, but
she's
man,
a disbeliever.
It's super boring.
She's a hater.
I'm just going to say, I'm not a hater.
Haterade.
I love, but it just feels a little bit boring. But what was interesting is Abigail Doolittle was in our studio a little while ago and just pointing out that it's interesting that you've got record highs like on the S&P, you see the NASDAQ 100, moving up again. And you look at something like the transports, which continues to be under pressure, and divergencies in different parts of the market. You do wonder what it means when maybe everything isn't more trending in the same way, if you will. I don't know.
We just spoke to Gina Bolvin over at Bolvin Wealth Management Group, and she made the point that, yes, everybody's waiting for NVIDIA. And she actually said that NVIDIA has replaced Jay Powell as the market mover.
Whoa.
And then she went dun dun dun. No, she didn't.
What do you guys think?
I mean,
for 24 hours,
yeah,
maybe?
No, I don't know.
Hours.
No, it still has to be the Fed in the direction of the Fed longer term, no?
Yes, longer term, because what the Fed says determines where bonds trade, and that determines how much you're willing to pay for equities. But right now, people are willing to pay all kinds of things for NVIDIA because it's the future.
Tim, who said that?
Gina Bolvin over at Bolvin Wealth Management Group.
So Gina
out of
Bolvin
Boston.
over at Bolvin Wealth Management Group out of Boston. I think she's wrong.
Do you?
Yeah.
All right, well.
There you go.
The Fed still matters, right?
Well, you know what they say about opinions.
Well, you asked for my opinion, and you got it.
How you make a
All
market,
right, there's
people.
how we get the closing bells here in New York on this Tuesday afternoon. Green across the screen, at least for the three major indices, with the Dow Jones Industrial Average up more than 60 points, or about 0.2%. The S&P 500 looks like it is going to close at another record high, 53.21 and change. As we wait for these numbers to settle, that's about 13 points higher, or 0.2% higher than where we were yesterday. The NASDAQ Composite up about 37 points, or 0.2%. Similar move on the NASDAQ 100. Again, those are record highs. But as you alluded to a little bit earlier, still seeing some softness in the cyclical space. Dow Transport's down 1.7% here on the day, and the Russell 2000 closing out the day lower by 0.2%.
Right, we saw the transports below their 200-day moving average. So, for those technicians, certainly something they keep a watch on. S&P 500, back to the big caps we go, guys. Almost an even split in today's session. So 246 actually gaining some ground in the Tuesday trade. Scarlett about 253 lower for unchanged.
All right, let's take a look at the sector performances. And it's a mixed day overall, even as 7 industry groups are higher. A lot of green there. And in fact, the best performers, utilities, up 1%. They're kind of a play on AI, Alex, as you've been talking about for a while, because they to generate the power that all those big computer networks and data centers eat up. So utilities gaining about 1%. Staples and financials up by at least 0.5%. Your laggards, energy, industrials, and REITs.
All right, guys, let's get to some of the individual gainers, if I may. And interestingly, Tesla is your number 2 gainer in the S&P 500 today, and it's the number 1 gainer in the NASDAQ 100. And I was kind of having a hard time kind of finding any real news. The stock finishing the day just off its highs of the day, but still with a 6.7% gain. Morgan Stanley's analyst reiterating Tesla's an overweight, making the case in a note to investors that Elon Musk needs Tesla more than ever before. As investors question if the CEO's commitment is less or more, we believe Elon needs it more than ever before. Also, what was interesting, and Benzinga Pro is putting this out, talking about how Tesla increased its 72-month loan rate in the United States, saying that is a positive sign for EV demand. So from about 0.99% to 1.9%. So I don't know. Does that mean that that is a positive? Anyway, a real outperformer. So kind of struggling to find a clear, definitive reason why, but nonetheless a real standout in the trade. Also standout to the upside, Dollar General up about 3.5% in today's session, and this again was among top gainers in the S&P 500. Number 4 gainer in the S&P, as I mentioned, up 3.5%. This is as Citi's analyst came out and said there's no sign of a traffic slowdown at the dollar store operator. He rated the stock a neutral. And then one more, Macy's. I gave that actually for you, Romaine, a little bit of a gift, because I know you talked with the Macy's CEO today. But anyway, Macy's was up about 5% in today's session, beating profit estimates in the most recent quarter and raising its outlook for the remainder of the year. So maybe giving the CEO some breathing room. I don't know. What did you get from your conversation, Romaine?
Well, they've really focused on those first 50 stores that they keep talking about, the ones they think are going to be the prototype. That's where the growth was, Carol. I mean, if you took those 50 stores and separated from the rest, that's 3% growth on a comp sales basis. You put those stores back in with the other 300 plus stores here, and you got negative growth.
Big difference.
There it is.
So that's where the growth is. All right, that's the gainers.
Okay, how about some decliners? I do want to start with Palo Alto Networks, falling today by 3.7%. They fell after the company reported earnings after the bell yesterday. They gave a downbeat forecast for the current period. It renewed concern that there's going to be a slowdown, or there has been a slowdown when it comes to cybersecurity. Once again, shares falling by 3.7% today. And shares of Children's Place plunging today, down 20%. It's a kids apparel retailer, got $150 million market cap. It's a small company, but it is down 97% since 2017. They announced that longtime CEO Jane Elfers has left the company. They've named Mohammed Umair as interim CEO. Elfers has been at the company going all the way back to 2010. Before that, she was CEO at Lord & Taylor. And even though shares fell 19.5% today, we can go ahead and round that up to 20%. It's only its worst day going back to February. So it shows how recent big moves have hit the company's stock.
Do you not shop there, Tim?
I don't shop at Children's Place. Yeah, we're all about...
because their clothes fall apart after 3 uses.
I don't know. We haven't shopped there. We're all hand-me-downs. There's so many people whose kids are just older than ours, and we just get the free
circular
clothes.
Economy.
Yeah, it's I don't even know where any of this stuff comes from, but it just shows up. And we dress our kids in it. It's fine. Shares of Peloton also falling today, down by 16%. They fell after the company said on Monday that it's doing a global refinancing, which includes selling $275 million of senior convertible notes that are due in 2029 and then entering into a new $100 million revolving credit facility. Also, according to our own Bloomberg reporting, the company kicked off the sale of a $1 billion loan offering as it works to refi existing debt and recover from a recent slump in sales. This is according to a person familiar with the matter.
Did you see the interest rate, though?
Yeah.
They're shopping around.
11.5%.
Yeah, so they're at 12% on that. And I was looking at the previous, they were basically servicing around 2 to 3, and then they had the convertible notes, which were at 0%. I don't know what they're doing here, man.
Yeah, loan to carry interest at 600 basis points over the SOFR rate.
Yeah.
I mean, that's a lot.
Yeah.
Which makes the yield you're getting in the bond market not that exciting. But again, that's kind of risk-free. So taking a look at the bond market, you're seeing yields a bit lower, a bid pretty much across, particularly in the back end. I'm just really looking at the 10-year in particular because last week when it kind of broke below the 50-day, we kind of been bouncing around between the two. And kind of what's going to break us out of that range? Governor Waller said that the CPI for April was a C+. So if we get an A, does that kind of change the trajectory? I don't know.
I want to make a quick comment, though, about the rates, because you kind of were joking about it. But we were talking, I don't know, it was Andrew Fleming or someone we were talking to earlier about the competition between the rates that you get in the bond market versus what you can make in equities. And that's what sort of lead to sort of the FOMO here. But I think people forget, too, it's not just about what you're getting in money markets or in treasuries. I mean, there's a lot of corporate debt out there where you can get comparable results. Now, I'm not saying Peloton is it, but there are plenty of others out there where you can get high single digits and even low double digits without necessarily going into public equities. So.
Yeah, but it's so tight. The spread is so tight. Anyway, sorry, Scarlett.
No.
I didn't mean to bring the party to a halt here.
I was looking at Urban Outfitters earnings because they have just come out. The specialty retailer announcing profit and sales that beat analyst estimates. First quarter, let's see, comparable retail segment sales up 4.6%. Analysts were looking for an increase of 2.9%. And first quarter adjusted EPS 69 cents. Analysts were looking for 51 cents on average. The stock up by 8.5% right now.
Yeah, stock up 16% so far this year. So it's interesting, going to build on that gain. That's a huge pop, man.
Yeah,
that is a big pop.
The company CEO said that it was driven by continued strength at Anthropologie, Free People movement, and Nuuly brands. Consumer demand remains robust for spring and summer fashion, which bodes well for continued sales growth in quarter two.
So this is also a stock that some analysts wind up really liking and some investors because it's like a specialty retailer. Like it knows what the customer is, it knows how to execute, and it's not like a broad store, say like a Macy's or like a Target or a Walmart. It's very specialized, and sometimes that's good. Sometimes that's bad, and apparently I've been talking to some portfolio managers who like that kind of idea now for Urban Outfitters.
Well, it knows its customer, and it doesn't have to please everyone, which is proving pretty impossible when there's so much uncertainty and when your customers are segmented so much, right?
Yeah, it's very clearly defined. I agree with you, and right, so they know as long as they kind of get the product mix right, and their customer stays true, like they seem to.
Which is not us. Maybe Tim, but not us.
I like anthropology.
Hand-me-downs.
Romaine
Romaine gives me his old clothes that I can wear on air.
It's fair enough.
Still hasn't taught me how to tie a bow tie, but
no, it's coming.
Yeah.
I have to teach you how to tie a regular tie.
I'm looking for that too.
He's never going to tie on. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenovec live here in our Bloomberg Interactive Broker Studio. Now, you might recall, of course, yesterday, Ivan Boesky, who reached the pinnacle of fame and fortune as a high-flying Wall Street arbitrageur in the 1980s, only to be exposed as a cheat in the insider trading scandal that defined the era, passed away. It brought us back to that era. One of Gordon Gekko in the movie Wall Street, the high-flying greed is good 1980s. It was a very distinct time on Wall Street, that's for sure.
Yeah, our next guest is someone who knows about that era because she lived through it on Wall Street. She started as a receptionist at a brokerage firm at the age of 19, and 30 years later was named global partner at Invesco. Needless to say, Carol, Patricia Walsh-Chadwick, well, she's seen a lot.
She has seen a lot, and a lot of that is in her new book. It's called Breaking Glass, Tales from the Witch of Wall Street. Patricia Walsh-Chadwick joining us here in the Bloomberg Interactive Broker Studio. Welcome, welcome, welcome. I have to tell you, we have one question on our mind. Should we just go there?
Just go there, yeah.
Witch of Wall Street, where did that come from?
You know what? I did not know I was called the Witch of Wall Street until 5 years ago. And it was a
Are you serious?
I am serious. It was my 70th birthday party. I don't mind saying that. And there was a woman who said she had met me in 1985. I remembered it well. And she was with Bear Stearns. And she told me that she was told by the head of institutional sales, we have a very big important account at Citibank. One woman runs a lot of the money there. But we have a problem. The men are afraid of her. These are the institutional salespeople.
Because? Oh, go ahead.
Apparently I was fairly demanding, but that was my job. So she said, I had heard of this woman, but I had never met her. And all I knew was on the trading floor, they called her the Witch of Wall Street. And I was oblivious, and I only heard that 5 years ago, been out of Wall Street for a long time. But I decided, I was shocked. I really was. And then I thought about it for a while, and I thought, okay, so maybe I did break some china along the way, and maybe some of the characteristics that might get a man called the Wolf of Wall Street, you know, aggressiveness and, you know, demanding, get a woman called the Witch of Wall Street. And I decided that I would embrace it rather than run away from it.
So you're owning it.
I own it. I own it.
I was just going to say, did it bother you? Or like when you think back and you just, it's interesting because we have a lot of conversations about aggression from a man versus a woman. Unfortunately, we still have it. That can often be respected versus a woman is, you know, not a witch, but another word that rhymes with it. And so
precisely.
I'm trying to understand. So take us, like, I don't know, first of all, that era, like go back, it was a different Wall Street.
It was a very different Wall Street. And there were very few women who would really come in power. And that's why the title is Breaking Glass. I mean, I don't talk about shattering glass or anything, but you get to a certain point and then you're able to break through it.
Right.
And a lot of women aren't. I think women are treated more difficultly in terms of promotions because I think everything looks like a return on investment. And it's how much do we want to invest in her if she's not going to stay? Mm-hmm. And not going to stay generally means
having kids.
She has, yes, precisely.
Yeah.
And so I think women have to understand and accept that reality and just be even more aggressive. And I don't say that derogatorily. Mm-hmm. You've just got to be there. You've got to play the hard game if you're going to be in it for the long haul.
Did you have kids?
I did. I was 45 when I had my twins.
Wow.
So I had quite a long haul. And there was, I'll tell you honestly, there was a time when I wondered whether I could be a good businesswoman, a good wife, and a good mother simultaneously. And then when I had them, and it was wonderful for about 6 years.
Yeah.
But very truthfully, I think an important story in my book is that we were on vacation and our children were 5 years old and we were on the beach and my husband came home one day with them And he said, sweetheart, we're on the beach swimming, and you're on conference calls. And I thought about that overnight, and I woke up the next morning and I said, honey, I'm going to retire. And I retired at the age of 51.
Yeah.
It was a big step to take, but in my mind, it was the right one for me.
Yeah.
It was the right one for our family and what I did. And I ultimately had another.
Well, I was going to say,
career.
you didn't really retire. Like, you know, this is not your first book, and
That's
you were
true.
also, you know, global partner at Invesco, and it's certainly in a second career as a member of many corporate boards.
I did corporate boards and I did expert witness work. So yes, but I do think that women.
But the 9-to-5 grind, it was different, or was it?
The 9-to-5
grind, like in terms of your retirement.
It allowed me to do what I did want to do.
Yeah.
I didn't want my children being raised by nannies. And so, you know, I accept the fact, and I think most women have to accept the fact, you're going to have some more difficult choices than likely men are.
Was it the right move to retire at 51?
For me, absolutely. I don't look back with any regret on it at all.
Would you have, if you were to do it again, retired earlier if you could have?
No, I think the time my children were twins and they were 5th grade going into kindergarten, perfect time. I don't have to make all the play dates when they're 2 and 3 and 4.
Right.
But I did want to be there to answer the questions when they were getting older. So for me, it was perfect.
Well, it's funny because Tim and I have had this conversation because he's back. Well, now it's over a year.
Almost
or so,
a year, yeah.
Almost a year that took a paternal leave. You know, a leave after.
But like a real leave, not like
6 months. 6 months.
Which is unheard of.
Which is incredible that our company does this.
I was going to say that. Credit to Bloomberg. That is fantastic.
It was fantastic, and I think it's also changed a lot just in recent years. I mean, I wasn't at Bloomberg when I had my first kid, but I got 2 weeks off at that point, and it just makes such a difference for when you're raising a family.
But what did like we can be real. And I
yeah,
think
be
we've
real.
Talked about this on air.
I've talked about a lot. I don't know where you're going to go with this.
We've talked about this on air. No, but the point of that we need men to take that 6 months so that it kind of evens the playing field, if you will, right? Of that, I'm not, you know, the female isn't necessarily the only one that disappears from the workforce for 6 months or what have you, that it's good to see both parents doing it.
It's something that is not done very much in our business, the world of finance and investing, but it's done much more in Europe.
Yeah.
And I think we can learn from them.
All right. Take us back, though, to your first job on Wall Street, Citigroup. It wasn't Citigroup, was it yet?
Oh, no.
Citibank.
Was it my very first on
Wall Street.
doing the receptionist job.
Yes.
Okay. I was 19 years old, and I had been given the job, you know, I hired a job for $90 a week. And I was so proud of myself for getting the job.
Can I ask you what year this was?
This was 1968.
1968. Okay.
But it was more than the minimum wage, so I was very proud of that. And all I wanted to be was the best receptionist in the world. And 6 months later, George Burden, who is one of my mentors, my book is dedicated to my mentors, he brought me into his office and he said, we're going to give you a raise from $90 a week to $100. And I did my quick arithmetic and went, well, that's 11%, but that's in 6 months, so that's really 22%. And I felt so empowered. And then 2 months later, it was Christmas time, and he called me in and he said, we're very pleased with your work, and we're going to give you a $1,500 bonus. It was like a third of my salary. I started investing, and that was about the first thing. Literally, less than a year later, he sent me to New York to close a deal. I didn't know what a deal was. I got into New York. I had a limousine that took me around to 5 places. I collected 5 checks, each for $1 million, went back to Boston, presented them to him. He and his partner took me out to dinner at the Ritz-Carlton on Arlington Street. And that night, I lay in bed and said, I wonder if I might ever have a job like theirs someday. So it was from lowly beginnings, but I think the message of my book is, you know, be adaptable, learn, put your hand up all the time, and little by little, when you are, you know, adaptable, you'll become more confident. When you're more confident, you'll be successful. And it's not a very complicated story.
No, but it's interesting. But there is something about like sticking at it, because I'm sure it wasn't always easy. We're going to have to take a break, but we want you to stick around so we can continue the conversation. We are talking with Patricia Walsh-Chadwick. She's here in our Bloomberg Interactive Broker studio, and her book is called Breaking Glass Tales from the Witch of Wall Street. So we're going to continue because her perspective, I think, is an important one.
And one thing I want to touch on when we return is what it took to get her at age 19 to become a receptionist, because you have a very interesting story early on in your life, and we're going to touch on that in just a few minutes. Again, Patricia Walsh-Chadwick here in the Bloomberg Interactive Brokers studio. Her new book out now.
All right, you are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
It's 421 on Wall Street. We do check markets all day long at Bloomberg, keeping an eye on Urban Outfitters. Stock is surging after hours. It reported net sales for the first quarter that did beat the average analyst estimate. After hours, we do have Urban Outfitters up now by just about 8.2%. Stocks rose to another record today ahead of results tomorrow from NVIDIA. S&P up 13 to 53.21, a gain today of 0.2%. The Dow up 66, up 0.2%. NASDAQ up 37, up by 0.2%. 10-year, 4.41%. The 2-year, 4.83%. Spot gold down 0.1%, 24.22 the ounce. And West Texas Intermediate crude down 0.7%, 79.26 per barrel of WTI. Again, NVIDIA will be the big market event tomorrow. NVIDIA shares today climbing by 0.6%. Recapping, S&P at a record, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. I want to get right back to our guest. Patricia Walsh-Chadwick is the author of Breaking Glass, Tales from the Witch of Wall Street. It's not her first book, but it does detail her decades on Wall Street, starting with the job as a receptionist at the age of 19 and culminating as a global partner over at Invesco. So, Patricia, that's exactly where I want to start, is the beginning. And I'm not talking about 19 years old and your job as a receptionist. I'm talking about early on, and because you have an interesting story that I think would surprise a lot of people.
Yes, and that story was my first book. It was called Little Sister. I was born into a religious community in, of all places, Cambridge, Massachusetts, so part of the real involved world, a group of highly intelligent, highly educated people, all Catholics. And they were under the auspices of a priest named Father Leonard Feeney, a renowned Jesuit, and a woman named Catherine Clark, who created the entity, which was really for Catholics at Harvard and Radcliffe and other schools to have an opportunity to meet and talk about their own religion. And during the war, World War II that is, it was very, very popular. And after the war, when all the veterans were coming back, Father Feeney was the most popular lecturer in the world. My parents met there. My father had been a naval officer during World War II. He was getting his graduate degree in philosophy at Boston College. And my mother was 12 years younger, and she was a brand new 18-year-old convert to Catholicism. They met, they got married. A year later, I was born. But under Father Feeney's influence, the organization became very, very, doctrinaire about you had to be Catholic to be saved. And it was at the time that ecumenism was spreading. And the idea was religions should all get together and, they all worship God in one way or another. And let's not, say that we have battlegrounds. But that was not the way they took it. And so pretty soon Father Feeney was no longer allowed to practice as a Catholic priest. My parents stayed with him. In a way, that was the only world I knew. And there were 60 adults. Yeah. Among that were 12 married couples. And then 39 children came along. I was one of the oldest. And all of a sudden, things really started to change. We had a number of houses in Cambridge, and they built a big red stockade fence. So now the whole world was shut out.
It's like a compound.
A compound, absolutely. And when I was 6, the children were separated from the parents. And then the parents were arm twisted, seriously, to take vows of celibacy. And my father said, absolutely not. And Father Feeney came back to him and back to him. And finally, Father Feeney said to him, you're the one couple, the only holdout of the 12. Mm-hmm. So they felt they had to do it. They really wanted us to have a very Catholic education. Years later, one of the other children told me his parents told him the very same story. Wow. So it had been this divide and conquer.
Right.
And now the children were not being brought up by the parents were not able to be together. And it was a monastic environment. Silence most of the day. We're not allowed to address our parents, speak to them at all. And so people say, well, why did they do that and all of that? That was their decision, for better or for worse.
Right.
But my father used to break the rules, and breaking the rules to me was what told me that he loved me. Yeah. And the fact of the matter is, I never blamed my parents. Somehow, I think I was a bright little girl, but somehow I blamed Catherine Clark, whom we called Sister Catherine, and Leonard Feeney for separating my parents. And again, I never thought of it as a cult. You will not see the word cult in my first book. Yeah. It was my home. It was my daughter, when she was 20 years old and came home from college, and she said, Mom, I have 2 things to tell you. I'm thinking, what is that? And she said, first, you need to stop
Never a
everything.
good start.
You have to stop everything until you finish this book. And then she said, and you have to accept the fact that you grew up in a cult. I never thought of it that way. It was my home, and I loved it in many ways. But ultimately, I accept the fact that it was a cult. And then when I was about 14 or 15, I started having crushes on boys. Now, that was not going to keep me in the community. Sister Catherine wanted every one of the children to grow up, remain celibate for life. I would be a bride of Christ. But I had these dreams of a prince coming into the garden and sweeping me off. And, you know, we would go off and live in a castle and have lots of children. Not that I knew how any of that would happen. And then the next thing I knew, she'd kicked me out. No opportunity to come back.
How old were you when you were kicked out?
17. I had just graduated from high school. We were schooled within our own community.
Yeah.
I'd never, seen a television show, never read a newspaper, never been to a grocery store, never held a dollar bill for
Where
a
did
gal.
you go?
Well, so I had been accepted at 2 colleges because they needed the school to be accredited. And I was a good student, and I got into Vassar, and I got into Bates, where my father had gone.
Yeah.
She made me write a letter saying that I wasn't coming. She said it would be that I would lose my soul if I went to college. So she allowed me to go to a secretarial school so that I could get the necessary skills to be able to earn my own living. And my first place to live was at a room in the YWCA in a not very fashionable section of Boston.
How does something like that? You seem pretty normal.
Oh, but I'm not.
I don't even know what normal is anymore. But you know what I mean, and you've done really well. And I just wonder, though, what of that still stays with you or impacted you as you ventured out into the world?
And also raised your own family.
And raised, yeah.
Yes. Oh, yes. I mean, I look back on my life. I know it was very abnormal and very strange, but I look back and I wouldn't change anything. I'm not saying I wouldn't have had more time with my parents. Of course I would have.
Yeah.
But I think the way one's path goes in life ultimately leads you to where you are, happily married, 2 children, who one of them's now engaged. I mean, they're 30 years old now. They're young adults. And I just think sometimes you're given the ability to get over the things that aren't good and find the best in them. Sister Catherine herself was never a mentor to me. But I believe she was a role model. This was a woman who ran a community of 100 people. Not one man pushed back on her. Not one woman pushed back on her. And I think when I got into that dog-eat-dog world of Wall Street, subliminally in the back of my mind, my only model was someone who ran things and was a woman.
Right.
And I think I just went, okay, that's what I got to do. I'm going to do this. I never thought I can't do that because I'm a woman. So I have to give her a little credit.
So maybe that's the perfect segue to getting from your first job or your first role to one where you move to the business side. You said you lay awake at night wondering how you could become one of those deals people. Yes. So how did you do that?
It was little baby steps, let me tell you. One of the first things I did was by the age 21, I became a stockbroker. I didn't end up getting customers. I just thought, I can do that. Then I had to do those S&P tear sheets. You're both way too young to know what they are. But
Memorize
they were books.
tickers?
Pardon me?
Did you memorize tickers?
I memorized every ticker on the New York Stock Exchange. And I would go into the trading room and I would give myself tests. And I just found the whole thing so exciting. And by the time I moved to Philadelphia with my best girlfriend, I was becoming an assistant to the analysts. And the one thing I said of them, there were 6 men that I was reporting to. I said, listen, I don't want to just put numbers on a piece of paper for you. I want to learn what those numbers mean. And I want you to promise me that you'll answer all the questions I have. I was ready to walk away from that job if they had said, no, we just want you to give us the numbers. They kept their words, every one of them. And I walked away after 2 years. I wasn't even 25 yet. And I understood how the trucking industry worked, and the airline industry, and the insurance industry. And so from there, it was just a little step bigger till I became an analyst.
Well, it's like you have this incredible story, and understanding that story is an important part of you, but understanding, I think we feel that way, like investment stories, like understanding the story or the fundamentals or what something really is, rather than just a sheet of numbers, right, and understanding
Absolutely.
it. 30 seconds left. What would you like to share with our audience?
Well, I do think for young people, and I love mentoring, it's important to have mentors in your life. It is also really important to be adaptable.
Yeah.
I think put your hand up, say yes, ask someone for help. Don't be afraid to. And you'll find little by little, the first time it's hard, and then you have more confidence, and then you build up your own resilience. And I think everyone should have a mentor. There's no such thing as a bad mentor. They're either a mentor or they're not.
If you were starting today, 15 seconds left, would you still go to Wall Street, do you think?
I love it, so
okay.
I adore it.
Just checking to see if like you're feeling about it.
Yes, and I think it can be a great place for women. It really can.
All right, love it. Promise you'll come back when the paperback comes out.
Or even sooner.
Or even
This was
sooner.
great.
Or even sooner. What an amazing tale. Has Netflix called and said we need to make this into a series?
There have been little talks about different little things.
I would watch
Good question.
that. All right, Patricia Walsh-Chadwick, former global partner at Invesco, her book, Breaking Glass Tales from the Witch of Wall Street, joining us here in studio. This is definitely going to be in our weekend show.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 981 newsroom in Washington, D.C.
All right, thank you, Tim. Donald Trump's defense team has rested its case today in its criminal hush money trial. Judge Juan Merchan sent the jury home for the day and told them to return next Tuesday to hear those closing arguments. Bloomberg's June Grosso says the next step, it's going on now, jury instruction.
So important because it's about sort of the legal rules for the road that the jurors have to follow. And so they have to listen very carefully. And what is said there is what the attorneys are fighting about.
The judge says he expects the jury could begin deliberations perhaps at some point on Wednesday. The White House is blasting former President Trump over a social media post with some eye-opening wording.
The 30-second video was posted yesterday on Trump's Truth Social account. It's no longer there, but it referenced a unified Reich as a potential headline if Trump wins a second term. Reich typically refers to the Third Reich set up under Nazi Germany. The White House is calling the video, quote, abhorrent, sickening, and disgraceful. A Trump spokeswoman says it was a repost from a random account by a junior staffer who, quote, clearly did not see the word. In Washington, I'm Nathan Hager, Bloomberg Radio.
North Carolina's House of Representatives considering a new bill called the Unmasking Mobs and Criminals Bill that would ban the wearing of face masks in public to hide a criminal's identity, even if you want to wear that mask for health reasons. State Senator Sidney Batch.
This is actually a bipartisan concern that we've heard from all of our constituents. And what we're hearing are from veterans and from a lot of individuals who are organ transplant patients that constantly have to be on immunosuppressants. And they're just really worried.
The legislation was passed by the state Senate last week. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Another record for the U.S. stock market today ahead of results tomorrow from NVIDIA, the giant chip maker at the heart of the AI revolution that has powered the bull market. Again, record close on the S&P, 53.21, up 13, a gain of 0.25%. Dow Industrials today up 66, up 0.2%. NASDAQ up 37, also a gain today of just about 0.2%. 10-year yield, 4.41%. The 2-year, 4.82%. Spot gold fell 0.1%, 24.21 the ounce. And West Texas Intermediate crude down 0.7%, 79.26 for a barrel of WTI. Bottom line, records for the U.S. stock market. And Gina Bolvin, president of Bolvin Wealth Management Group, was a guest right here on Bloomberg Business Week. She told us she does see further gains for stocks.
We've just come through yet another better than expected earnings season, and it's usually fundamentals, and it is fundamentals that is driving this market higher, as well as we're in a better macro environment.
Gina Bolvin of Bolvin Wealth Management Group, interviewed right here on Bloomberg Business Week. After hours, we did hear from Urban Outfitters. That stock rallying after hours. Urban Outfitters up now by roughly 8%. Again, recapping, stocks higher. S&P at a record, up 13, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenovic. And, you know, I'm thinking, I know I keep laughing that it's kind of a little bit boring, but we did see the S&P 500, as Charlie mentioned, hitting another record high. We are getting NVIDIA tomorrow. Very high bar for that company. Shares have soared over 90% so far this year after more than tripling in 2023. It was the #1 performing stock in the S&P 500 last year. It's very high on the list this year as well. But, you know, this is basically the poster child of AI. And when we talk about AI in the last year or so, we've always kind of, the road leads back to NVIDIA. There was an interesting story, though, on the Bloomberg today that said, you know what the real AI play is? And this is something that also came out of Milken when I was there, is that, you know what it is? It's an energy play. Yeah. All those data centers, how do you power it? How do you do it? It's why Microsoft was doing deals with, you know, about renewable energies, if you will. And so that's a lot of what's going on.
Okay, so here's some numbers that we're going to be looking for tomorrow, Carol. Mm-hmm. In the latest quarter, which ran through April, it's projected to report a 243% gain in revenue. That's according to Wall Street estimates. The company's H100 chip, a so-called AI accelerator, has become the hottest commodity in Silicon Valley.
I bet it has. No doubt about that. All right, everybody, let's get to our next guest. We're delighted to have him here. Safe to say he changed how we think about grocery stores, supermarkets, made us start to care about how and who is producing the food we eat. John Mackey co-founded Whole Foods Market back in 1980. Amazon bought it in 2017. One store in Austin, now more than 500 today in the United States, in the UK, and Canada. John co-authored a New York Times and Wall Street Journal best-selling book. It was titled Conscious Capitalism, Liberating the Heroic Spirit of Business. And his follow-up was Conscious Leadership, Elevating Humanity Through Business. He's written cookbooks about diet, health, longevity, and more. Now he's written about his personal and professional journey as CEO of Whole Foods for more than 40 years. It's all in that new book. It is entitled The Whole Story, Adventures in Love, Life, and Capitalism. We welcome John Mackey here in our Bloomberg Interactive story. Hello, how are you?
Fantastic.
It's great to have you here. So I want to start with where you guys started, and I'm curious what you think turned out even better than you thought from that first single store in Austin, and what might you have liked to have seen gone differently if you could change things?
I mean, we were just kids. Renee and by the time it opened, I was 25, Renee was 21. So I didn't have a business background, neither did she. But we were very young and idealistic and energetic. And the first store was actually called Safer Way back in 1978. It was a vegetarian store. And we just wanted to sell healthy food to people, earn a living, and have some fun. I mean, and in a lot of ways, that continued all through Whole Foods Market's destiny. We didn't have big growth plans. That kind of came along after we relocated that first store, which was in an old Victorian house on a non-commercial street. It was not a great place for a store, but the first real Whole Foods Market, when we also merged with another small natural food store that were our friends, and together we changed the brand to Whole Foods Market. fantastic location, and the store just took off. And then we had a terrible flood 9 months after we opened up. We knew we built in the 100-year flood zone.
Yeah.
But we had a 100-year flood in the first year, and it had been 70 years since there had been a flood like that in Austin. So that caused us to need to get a second store, and then that was successful too, and then a third store, and then I suppose we really started thinking bigger back in 1989 when we opened our first store in California. We were California dreaming, and we opened one in the Bay Area in Palo Alto, California. And that took off, and it's kind of like, wow, maybe we could even be a national company. So it's just. It changed a lot, but it wasn't like we were MBA students that had done this market research and decided we were going to build this national company. We were just young kids kind of having fun. And
for lack of a better term, it was much more organic than that.
Very, very good, Tim. You got it.
Thank you.
Hey,
would you have liked anything to have gone differently? Like if you could change things?
You know, a question I get asked a lot by media is something like, if you could go back and tell your younger self, what would you want to tell your younger self? And I kind of have 3 jokes that go along with it. The first joke is, it wouldn't matter, he wouldn't have listened to me. And the second joke is, I would have told him not to get involved with that woman. And the third one is the truth. I don't think I would tell him anything because, I mean, not that I didn't make any mistakes. I made a ton of mistakes, and I could have saved that younger self from making mistakes, but then I wouldn't have learned the lessons I needed to learn.
Yeah.
And it all turned out so well, right? So
even the sale to Amazon,
I think so.
Good with it.
I mean, yeah. I mean, people ask me if I have regrets. Do you regret selling to Amazon? And the answer is no. I regret the circumstances that made that the best alternative for us. It was the best alternative. If I could go back to that time, I'd make the same exact decision. And the deal has worked out pretty well for Whole Foods. I mean, people don't realize that Amazon let us drop our prices. We needed to lower our prices to combat the whole paycheck narrative. And they helped us. We couldn't have done that on our own as a public company, not easily. It would have been, the markets wouldn't have tolerated the short-term sell-off in the stock. But we dropped it 4 times in the first 2 years under Amazon. They took the long-term view. And then they also raised the pay of everybody in our company in the first 6 months. They made, they went in with a $15 minimum wage, and everybody else had to go up from there. So Amazon, and then when COVID hit, I mean, how could Whole Foods have possibly done all that delivery? Amazon's technology. So Amazon was a great partner for Whole Foods.
It's been a couple of years since you retired as CEO, and I'm wondering if today you can walk into a Whole Foods and just buy something.
You mean without being recognized?
Not without being recognized, but without being critical, or without finding yourself that you're working, or without finding yourself, can you just go in there and shop without thinking about this was your entire career?
Yeah. You know, a couple of points. The first one is, if you're an entrepreneur and you create a business, it's a little bit like you're a parent and you have a child. Your child grows up, and you can guide that child, but the child's not you, and the child's going to make some choices you don't agree with, and that's okay. You still love your child. So is Whole Foods doing exactly everything I would if I was still CEO? And the answer is, of course not. But one of the gifts that I gave to my successor, Jason Beekle, who is the one I wanted. I picked Jason, and Amazon.
We just caught up with him at Milken.
Yeah, Jason's amazing. And one of my gifts to him was not to be hovering and watching and second-guessing him. Just, so I have a mantra now. It's not my problem any longer. And that's a gift to Jason, because then people aren't coming to me complaining about stuff. They know I'm not going to listen to them.
Conscious capitalism. You co-founded that movement, and simply put, it's right. We're thinking about business benefiting everybody, multiple stakeholders. Many would argue, we talk about it in the business environment too, right? A lot of investors saying, got to think about multiple stakeholders. The Business Roundtable talks about it. So, I feel like we talk a lot, John, about the wealthier individuals at a company are doing really, really well, and it's not necessarily trickling down. Has conscious capitalism, I'm curious how that has evolved in thought for you, if it still holds.
I mean, conscious capitalism's now, I feel like it's being attacked on 2 fronts. It's being attacked, the traditional capitalists are attacking it because they're concerned. They don't want to lose control. They don't want the owners to lose control of the business, and rightly so. The owners and the investors get paid last after all the other stakeholders are paid. But then we'll say on the left, the anti-capitalist, they're trying to weaponize it in order to take power from traditional capitalism. And it's like, no, conscious capitalism is not an economic system. It's a management philosophy. It just really has some very basic principles. First principle is that every business has this potential for higher purpose besides only making money. I mean, my body produces red blood cells. If I stop producing them, I'm going to die. But that's not my purpose in life, to produce red blood cells. Business must make money or it will die. But that's not exactly why it exists. Why does it exist? To create value for its customers. That's why it exists. Doctors heal people, teachers educate, architects design things, engineers construct things for customers. So does business. And so it has this higher purpose, and it should articulate that higher purpose that unifies stakeholders together.
Well, then do you think there's enough of conscious capitalism going on in society? There's capitalism going on, but do you think there's enough of conscious capitalism going on?
I would like there to be, first of all, there's a lot of what I call unconscious conscious capitalists. They don't know that they're conscious capitalism, but the second key principle are that the stakeholders are interdependent. That doesn't mean all stakeholders are equal. No. I mean, the customers are obviously the most important stakeholder. That's why the business exists. And who's second most important? Well, probably the investors are. And then probably the team members are third after that. Then you have suppliers. Then you have the communities that we're all part of. They're all important. They're all interdependent. And a conscious business is going to take care of all of them, recognizing
But
they're
there's a
interdependent.
ranking.
There is a hierarchy, and there should be. Business is not, people judge business because it doesn't act altruistically all the time. And it's like, what part of our society does? It's human nature to be both self-interested and looking out for yourself and looking out for your families first, and then, but also generous and caring and compassionate. We're both. We're complex beings. This bifurcating people, they're either all completely altruist or they're completely selfish and greedy bastards. That's just wrong. That's not the way human nature is. And business isn't that way, but no other part of our society is either.
You talk about this in your book, and you learned a tough lesson. I think it was back in 2009 when you were hiking on a trail and you found that the Wall Street Journal had published editorial that you had written. They called it the Whole Foods Alternative to Obamacare, 8 things we can do to improve healthcare without adding to the deficit. And it got you in some hot water at the time. People were boycotting your stores. My question for you is not about that. It's about, what do you think you can say now that you are no longer CEO of Whole Foods that you weren't able to say during your entire career because you were worried about people boycotting stores or people coming after you?
It's a great question. And I mean, my big learning from that experience is that people do not separate the CEO from the company, or at least the founder or the entrepreneur of the company. I thought, look, it's America, free speech. I'm expressing my personal views. But no one saw it that way. They saw it, this was Whole Foods views. And so there were boycotts and there were boycotts and there was hundreds of letters coming into, maybe even thousands of letters and emails coming into our board demanding I be fired. So I kicked a hornet's nest, and it's like, so I went away from that realizing, okay, I get it. I don't want to hurt my child. So I'm not going to speak up. The board actually instructed me, never ever again write an op-ed piece that we haven't signed off and approved. So what can I say today? I could say anything I want to say, except I'm a place in my life where I've concluded that political talk just gets people so riled up today. We're like these two big tribes that hate each other, and people are constantly trying to sort you out. Which tribe are you in? Because do I love you or do I hate you? And it's like, I'm kind of not in either one of those tribes, because I really believe in capitalism. I believe in personal liberty and freedom of speech and freedom of thought, and I don't fit into the two big tribal boxes. So I can now speak about politics, only I've more or less decided I don't want to.
But isn't it interesting coming off the pandemic and George Floyd, the killing of George Floyd, where we did see CEOs come out and take positions? And I feel like employees wanted their CEOs and leaders to take positions, and we talked about the importance of it. So what is the balance for a leader who is running a company, and maybe there are some really important issues out there where they should take a stand?
Here's what I did at Whole Foods during that period of time, and this is what I'd actually recommend for other CEOs to do as well. First of all, if an issue is directly related to the purpose of your business, you should take a stand. Whole Foods took stands on animal welfare, seafood sustainability, things that direct organic agriculture, regenerative agriculture. These are things that are directly important to our purpose and why we exist. So I think definitely those are things appropriate to speak up on. But then it's like all the social justice stuff. That's not really Whole Foods Markets. We can't solve all the problems in the world. We're a mission-driven business, and we have to focus on our business. So I remember telling team members that were wanting me to speak up on these issues, and I said, listen, I believe in freedom of speech. So whatever you want to do when you're not at work at Whole Foods, you should do that. You want to advocate for certain political changes, you should do it. But while you're working for our company, we want you to focus on the purpose for why we exist. And we're here to nourish people and the planet. Yeah. We're here, and so that's a big cause to help people be healthier, eat healthier food. Work on that on our time, and then do whatever you want on your time. And because I can't separate myself, as I told you from the 2009 thing, there's no way I'm going to come out and take these political stands.
Right.
I can't even. My board wouldn't let me do it anyway. We got kicked really hard on that one. I'm never going to do it again.
I understand that idea of sort of staying in your lane when you're a business. But I also think that in this day and age, there are issues that can affect a business, even if you don't think they will. We were just talking about affordable housing earlier, and the fact that the majority of New Yorkers don't earn enough to live in New York City at a rate that would be deemed, affordable, 30% of your salary. So what happens to a business if it can't find employees because the people can't live in that area where the business is?
I did a whole piece when you guys opened in Detroit. Like, it was a big deal to go into that area.
First of all, I really empathize with that position, because I know when I was CEO of Whole Foods that most of our team members that work in our Manhattan stores don't live in Manhattan, right? They're living in the Bronx or Queens or Brooklyn or some other place. So I am empathetic to that. However, I have a different, I'm going to speak up on politics really briefly. The reason we don't have enough affordable housing is because we've regulated it out of existence. And I always, people ask me what to do about this problem. I say, we ought to create, just like some countries create enterprise zones where the rules don't apply. There'd be if a city like New York would set aside in places in Manhattan that would be sort of free building zones where they wouldn't have any taxes for housing. Affordable housing would not be taxed. There'd be no real estate taxes. You'd have different sets of regulations, say on the disability acts. You go to Europe and you don't have all of the, you don't have to put an elevator in everywhere. These areas, I'm not saying those regulations aren't good, but I'm saying if we want to have more affordable housing, that really drives the cost of housing up. And thirdly, manufactured housing is the way to do it, to make affordable housing. If you look at where most poor people in America live, they live in mobile homes. They live in manufactured housing, which is far more affordable. That's not really legal inside many cities. But if we allowed manufactured housing to come in and deregulate some of these areas, you would find Manhattan could have plenty of affordable housing.
Interesting. We have 45 seconds left. Your book is called The Whole Story. There's so much more in there, and I wish we had more time. I don't know. Why do you want people to read this book?
This book is, first of all, it reads like a novel. It's fun. It's full of joy. It's full of love. I mean, the things that I talk about in the book are creativity, entrepreneurship, and love. And this traces my own personal growth, both emotionally, psychologically, as a leader, and spiritually. It's a fun read. I really think people read it, they're going to like it.
I hope you can come back, because you obviously have lots to say, and it's really engaging and fun. So good luck with it. Maybe when it comes out in paperback, we have you come back. John Mackey, he's co-founder of Whole Foods Market, joining us here in studio. His latest book, his new book, is entitled The Whole Story, Adventures in Love, Life, and Capitalism. So joining us here in our studio.
All right, we got NVIDIA earnings tomorrow, Carol. In the meantime, the way the markets closed, the Dow up close to 0.2%, the S&P 500 up 0.3%, the NASDAQ higher by 0.2%.
Another record on the S&P. So obviously we see the momentum certainly to the upside here, but it was kind of a little bit of a slow day. All right, folks, that's going to do it for our Bloomberg Business Week. Carol Master along with Tim Stanovic. Stick around though. Balance of Power starts right now.